The stock market has been rising due to central bank intervention. We all know that now. You can see just how weak this rally really is when you look at the market breadth. How many stocks are actually rising? Hint, not very many. You came here for the truth, so let me unveil that for you. Today we're going to look at the market breadth, we're going to look at pensions, and so much more. Let's begin. This is the thinnest 52-week high on record, and we are looking at the NASDAQ 100. You can see where it has gone over the years, surpassing its previous highs. However, on November 7th, there was a record low, and I'd like to get into that right now. On the one hand, the NASDAQ 100 managed to rally again, closing at an all-time high again. Despite the new high, however, the breadth on the NASDAQ reads like this. So you can see the advancing issues are at 840, the declining are at 2100. When you look at market breadth, this is a technical indicator of the stock market to show essentially how many stocks are rising, how many are declining. And that gives you that idea, is this a bullish market or is it a bearish market? Who controls it, the bulls or the bears? And here, you would think that it's a very bearish environment by looking just at the breadth. But you see something weird is going on. If that seems unusually skewed to decliners considering the NDX hit a 52-week high, you are onto something. As a matter of fact, at 28.5% of all issues, today saw the fewest advancing issues ever on a day when the NDX closed at a 52-week high. Something weird is going on according to the fundamentals, how you would look at these particular indicators. The indicators now themselves are being thrown off because of central bank intervention. I've covered it 1,000 times before. Central banks printing money, buying shares, particularly in the US, and I'll show you that in a moment. But you look at it, and I've said this countless times, talked about it, showed you the documents, but here is even more proof on top of it all. When you look at this, understand that we can see only a handful of stocks are rising. Significantly less than the total amount. Now, there's never going to be a time when all stocks are rising, but you would see a hefty portion of the stocks rising in a bull market, but that doesn't happen anymore. Why? Because the central banks don't buy all stocks. They pick and choose. Of course, they choose a basket, but most of the money goes into particular stocks. We've seen it before, whether it's Amazon or Apple or Google or Facebook. These are the ones that are getting bought the most. You can see this for yourself. I've covered it before. You look at the Norway Central Bank, you look at these major wealth funds that are around the world, controlled by the central banks, the Swiss National Bank. You can see this happening when they're admitting to it and they're acting as hedge funds, pushing the stocks up, but only select stocks. That is proved with the market breadth. All right. Now looking at this, the MSCI Asia Pacific, you can see that this region of the world, just as all others, took a nosedive during the financial crisis. However, the US markets have been increasing ever since. March 2009 was the bottom. Ever since, it had increased. But when you look at this region, they only now just surpassed their previous high. 10 years later. And that's not something to fool around about. Because imagine if you held that, a basket of stocks in this area. You would really be upset that you had to wait 10 years, and that doesn't factor in inflation, 10 years just to get back to where you were before. That's not an investment. That's not a good investment anyway. All right. Now, pension funds. A lot of people are relying on them to be able to live, quite frankly. And what do you have to do? Well, you don't want to fix the problem, and you definitely don't want to admit the problem. So you need to bail them out. Okay. So this senator plans to introduce legislation that will allow struggling multi-employer pension funds to borrow from the U.S. Treasury to remain solvent. They're already insolvent, by the way. All right. It would create a new office within the Treasury Department called the Pension Rehabilitation Administration. I'd like you to just hear my opinion for a second. Whenever you make the government bigger, things will get worse. That's all. Moving on. The funds would come from the sale of Treasury-issued bonds to financial institutions. The pension funds could borrow for 30 years at low interest rates. One restriction for borrowers is they could not make risky investments. And that is just, it's so terrible. It's really, we're talking about bonds, essentially. Garbage. Complete garbage. This is not a solution to the problem. This is not a solution to the problem, and yet they might push something like this through. Who knows? Instead of just fixing the problem to begin with. Let me reiterate what I always do when I talk about pension funds. The stock market in the US is rising. The stock market is rising. The bond market is rising. Why the hell are pensions suffering? They're stealing the money. Risky retail debt to mature as credit market tightens. Check this out. Retail bonds. They're a small part of the high yield debt maturing across all industries. So there is now, in 2018 in fact, billions of dollars worth of these garbage retail bonds that are going to show their real ugly face next year. And I can't believe that there's some people out there investing in this. Just today I was looking at all of these different images of empty malls across the US. Big, expansive malls. And they were literally abandoned. The stores are closed. All of the furniture within the place is gone. There's just nothing. It's just empty halls at this point. All of that was built with this idea that the American consumer would continue to consistently be able to buy more and more and more. And right now they're at the most they've ever been able to buy. They're maxed out. They've got nothing left. If there's another recession, dare I say it, what's going to happen? There's no possible way to get out of this mess. Absolutely no way. But whenever I talk about that, people get scared, and maybe we'll just go to some kitten videos from now on. Okay. Oh dear. Obamacare. Premiums for the benchmark silver Obamacare plan will soar 37% on average for 2018. That's official data coming right out of the government, so it's probably going to be higher. On average, 37%. People can't afford this. How are they supposed to be able to buy their essentials? And if you want to look at it like this, how are they able to buy things like iPhones and new vehicles and renovations to their home and everything else if they're spending even more on their healthcare? It always goes up, constantly. This has been the worst thing, it seems. US healthcare spending has rocketed $900 billion since '96 due to aging population. And it goes on. All right. Healthcare spending increased 2.1 trillion in 2013 and has now reached 3.2 trillion, which equates to 18% of the US economy. Think about it like that. 18% of the US economy is healthcare spending. So when you see the GDP rising, I want you to think healthcare expenditures. How much you have to pay, because the price of everything continues to rise. Is it necessarily better? I'm sure there are new things becoming available, that's for sure. But is it better than, let's say, 5 years ago? Realistically not. It's not really advancing that fast in a 5-year term. Yet in that 5-year span, you can see how much has been added here. So that's what we need to consider. And people don't do that. They don't do that. They don't want to look at the truth. But I know that you've come here because you're looking for that truth and you want it no matter how hard it is to swallow. And that's what this channel is all about. You see the criticisms, you see the hate, you see the lies in the comment section. But I know that there are such a core group of people out there who really just want to know what's going on. And that's what I try to do every single day. So thank you all. That's it for this video. If you found it informative, please give me a thumbs up. And last but not least, if you found this video informative, I know you will find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. They have a look inside feature, which will allow you to flip through the pages of these books to see if you like them. Take care.